What is going on, apes? Welcome back to the channel. My name is Tyler, and we are looking at a major breakout that is coming throughout the rest of this week. That is what the technicals are telling me. Even though today is a great day, I don't think this rally is over by any means necessary. So we're going to go over the technical analysis. That is going to be very important when talking about this breakout. We're going to go over the option chain, the Stonko tracker data, as well as the Ortex data to give you guys an overall feel or an intraday update of where we do currently sit. And AMC is up 8.72% as we do currently speak in this video. So drop that like on the video, subscribe to the channel, turn on that notification bell, and let's get straight into it. So, like I said, AMC is up 8.70% for the day, which is a phenomenal day in and of itself. Nobody can complain about that. But when we are looking at the potential for a further rally, I think the potential is very strong here. As you guys can see, obviously, we did bounce off this $40 support level. We did close Friday at $41 per share. So I was looking for that strong break up above that, right? You don't want to hang out at the support levels. You want to break out above that. Start this stair step like pattern once again. After we did hit $48, some people were getting discouraged that we did fall back down to about $40 per share. But I said, this is a great thing. We're not hitting lower lows. We are hitting higher highs. And that is exactly what we are set up to do. It is very possible, guys. We do see that volume come back into the stock coming tomorrow or Wednesday. I expect Thursday to be a red day, just like it typically is every single week. But if we do get that volume increase coming tomorrow or Wednesday, I would expect to at least go to $50 or $60. $60 being that level that we really have to get at before a lot of the smaller shorts are going to be forced to cover because they don't have their margin requirements that would be available if they went so underwater on their short positions. And as we do know, a lot of these short positions were initiated at $6 to $10 per share. So at that point, you'd be down about 1,000% on your short position. So that is a monstrous amount to be down. Now, we do know we have this margin call situation coming on September 3rd as well, and September 1st. Now, September 1st is on Wednesday, and I do expect this to have a huge impact to the overall stock. Now, I'm sure you guys have heard this, but I'm just going to read this briefly right here. DTCC's Bob Stewart, Executive Director, Product Management for Institutional Trade Processing, basically discussed the UMR, uncleared margin rules. On September 1st, in quotes, there will be an upsurge in the volume of margin calls and an increase in the need for third-party custodians to keep safe collateral. Now, think back to the Archegos situation where they were taking all of this collateralized debt, going to other banks and getting loans on that, getting more collateral on their collateralized debt. They're trying to stop that by being done. And as we do know, after the whole Archegos thing did happen, we had a lot of high up people, even in the SEC, that were saying if Archegos is doing this, then other firms are probably doing this as well. And when they say they want to hold third party or have third parties hold the collateral, it basically means that if one party of a transaction were to totally flop and go bankrupt or whatever the case is, not be able to oblige for their end of the agreement or the contract, it wouldn't screw the other party like it did with JP Morgan. As we do know, JP Morgan lost billions of dollars with the fallout of Archegos. So that is basically what they are trying to prevent. And if these hedge funds and institutions, the ones that are over leveraged, they're going to be the ones that get tons of margin calls and be forced to cover on their positions. That's exactly what JP Morgan did with Archegos. They went in, they liquidated their positions. Viacom, that's a stock I invest in, went from about $100 back down to about $40 in the matter of about 2 days because Archegos was severely over leveraged in that stock and they essentially liquidated on their position. But in the case of AMC, they weren't, firms aren't long for the most part in AMC that are over leveraged. They are short in AMC that is over leveraged. So it could be like a reverse Archegos situation with think to Viacom going from $100 to $40. Think about AMC going from potentially $45 to $100. Think about that in that sense. I don't think it'll be that dramatic. It could be, it may not be, but that is really what I expect to come out of that. Nevertheless, going to be a great thing for AMC overall. You better believe that. So as far as the technicals, like I said, watch for the volume to go back into the stock. We are currently at about 93 million for volume, which is what I predicted. I did expect in between about 80 and 100 million for volume. So we're definitely going to come in over my expectations a little bit. We still have an hour and a half left of trading, and to be at 93 million for volume is definitely a good thing. You want to watch for the volume and the percentage move to kind of make a little bit of sense. So, especially if we do go, 120 million for volume, I wouldn't be surprised if we do close well over 10%. We were just at 10%, so I do expect that to happen. After hours is likely to be strong as well. So that is all I want to say from that. I do expect this rally up to about $50 to $60 per share here in the next couple of days. Like I said, Thursday is probably going to be another very red day. So let's move on to the Ortex data and get into this information. So short interest change for the day is positive 0.78%. Return shares 1.11 million, borrowed shares 1.95 million, but I don't like to pay attention to this because it's not telling you how many shares are actually covered or being sold short. It's simply from the free float on loan, which is went up yet again today at 21%. So I did expect the short interest to go up as well, as a lot of these hedge funds and institutions that do have shares out on loan are going to decide to sell them short. And like I said, the free float on loan is 21%. So I do expect the short interest could easily go to about 19 and a half, even 20%. If all of the shares that are currently out on loan were sold short, we would go to 21% short interest. Keep in mind, these are only estimations though. Now we are at 17.37% short interest percentage of free float, which is a very high number. But now I do want to make this very clear. You guys do not want to see the short squeeze happening at these lower prices. You want to see the short squeeze happening as well as a gamma squeeze happening, preferably when we're over $100. That is really where you want to see the short squeeze. So even if we do see this major rally up to 60, 70, 80, 90, whatever the case is, I'm not going to be calling it the start of the short squeeze until I see the shorts actually covering. And the fact that we have 88.85 million legal shares that have to be covered, not even to mention naked shorted shares or synthetic short shares, that you're going to see a huge boost in the price, as well as the FOMO buying, the day traders, the hedge funds and institutions that are making trades on this. You're going to see a huge move to the upside. So if you see these 10% days, 20% days, or even 100% days, if we double tomorrow, I still would not be calling that the start of the mother of all short squeezes. We have to look for the data. And like I said, you want the short squeeze to start at these higher prices, over $100. If the short squeeze started now, you're not going to hit those price targets that everybody wants to see unless we get just a vacuum effect of day traders, FOMO buyers, and hedge funds and institutions all taking their money into AMC stock. Which is possible. Anything is possible when it does come down to it. I'm not a financial advisor, not a financial planner or your dad, so ultimately do whatever you guys want to do. That is very important. Now, the Stocko tracker data is very interesting as well. We are seeing the fee to borrow at 1.2%, so it's definitely went up a little bit since even earlier in the day. We went from about 300,000 shares that were available down to 150,000 shares that are available. So interesting right there. The dark pool percentage is sitting at about 65%, and that was for August 25th. So this is a bit delayed. We should be getting that update here soon, hopefully throughout the rest of today. But we are still seeing that huge dark pool percentage, which is definitely not a great thing overall. But for this upcoming expiration week, we are seeing in the money calls 43,625, out of the money calls at 96,096. So you're definitely seeing some level of gamma activity going on. All of these calls only control 4.3 million shares. So that doesn't explain the move that we are seeing today in between about 8 and 10% positive for the day. But buying power is still buying power. Now, on September 17th, that's where you're looking at a potential for a major gamma squeeze. And regardless how it plays out, gamma squeeze or not, you're going to see a lot of volatility to the upside or to the potential downside. We have 100 and almost 127,000 calls that are in the money, 245,556 calls that are out of the money. And the closer we do get to this expiration date, to September 17th, you're going to see a lot of this basically open interest, the in the money calls and out the money calls for the next 2 weeks, rolling over to that monthly options expiration date. So you're going to see a couple 100,000 calls that are probably in the money and out of the money. So you're definitely going to see a lot of activity. The puts are pretty much destroyed. Only 32,000 that are in the money for the September 17th date, but 339,577 that are out of the money. Most of this open interest for the September 17th options expiration date for the put side, this 339,000 are deep out of the money puts. So you're looking at in between about 25 and the $20 strikes, holding the most for open interest. So I don't expect to see really any shorting activity coming in for this monthly options expiration date. Considering how far ahead we are on the call side, it looks like we're setting up for a major gamma squeeze, but we will not know that information obviously until we get to the week of September 17th. So that is all for this intraday update. We'll be back later on with more videos. Check out the 3 links linked down below in the description. We have a link for the buy and sell alerts. We've been making trades all day over there, killing it, taking some profits on some trades, opening some new ones. So definitely check that out. Very inexpensive. We also have a free Discord group chat for AMC stock. Obviously, we also do have a link down below for public. Get up to $70 in your choice free stock. It only takes about 3 minutes time to receive your free stock. No need to link a bank account or deposit a single dollar. So definitely check that out. Also a link for Webull. If you guys want to get up to $2,400 in free stock, you get 4 free stocks. Check out that link as well. You can actually turn off a setting in Webull so they cannot lend out your shares without you knowing about it. So check out all of those links, but I will see you guys in the next video.